Depending on the stocks that you are looking at right now, you might think stocks are going crazy. But if you're looking at others, you might think that they've done absolutely nothing. Some people are saying, hey, stocks are cheaper than they've ever been right now, and they're cheaper than they will be for decades. Yet other times people are saying we haven't even begun to see the carnage yet. So which one is true, and how can you know when stocks are actually cheap so that you know when to buy? Ready? Let's dive in. Let's look at a few examples of some stocks that I'm talking about here, just so we can get an idea of the differences depending on the stock that you're looking at, because just by looking at the index, you do not get a good picture of what is going on. First, let's look at Coinbase. You can see here that Coinbase, as recently as November of 2021, so under a year ago, it was priced at $342 per share. Whereas right now, it is at $75. Now that is a massive drop. And if you've been around the channel for any length of time, you know that I absolutely hate Coinbase. And no matter what price it's at, I would probably still say it's too expensive. Even if this thing was 1 cent, I'm never touching this stock with a 10-foot pole because I hate the product, I hate the leadership, I do not like anything that the company does. Now let's look at another stock. Right here we are looking at Square, renamed to Block now. They have payment processors, they have a Bitcoin purchasing app, and you can see here that as recently as August of last year, so a little over a year ago, they were at $275 per share, and now they are down at $59 per share. Again, a massive drop, but the question remains, does that mean that they're cheap? Does that mean they're on sale? Does that mean that they're at a good price and that you should buy? We have to take a two-pronged approach to this. We have to understand things from the actual price, not the price per share, and we have to look at the thing through the lens of valuation. Most investors, most retail investors will take a look at a stock price and say, one is $10, one is $1,000, that means that one is cheaper. Wrong. When we look at a company like Amazon or Apple, those are massive companies. They're trading at, Apple's at $130 a share right now. You take a look at a company like Berkshire Hathaway, Warren Buffett's company, is trading at $250,000 per share. Does that mean that Berkshire Hathaway is more expensive? Absolutely not. What that means is that there are far fewer shares of Berkshire Hathaway, so the company is divided up into fewer pieces, which are larger percentages of the total. You would have to know how many shares there are, and you'd have to know the market cap. What is the overall dollar value of the entire company right now? So that's the first place to start from. You have to understand what the total value of the company is. The price per share by itself is absolutely 100% meaningless, especially when you're comparing the price per share to the price per share of other companies with different market caps and different numbers of shares. Now, the second thing that you have to do is look at this through the lens of valuation. When we're taking a look at a company like Block, we can see that it is down from its high of $275 and is currently trading around $59. So most retail investors would say this stock is cheap compared to what it used to be. But you can't know that from the price alone. All you can know is that in the past, investors were valuing this company at a much higher valuation. You don't know whether it is a good valuation now based on that. It might just be that a year ago, investors were paying 1,000 times more than they should for the price for the stock, and now investors are paying 100 times more than they should for the stock. You don't actually know whether it's a good price right now. So you have to answer the question of valuation. What is this company actually worth? And unfortunately, most people won't admit this is subjective. So you have to answer the question, how much would you pay for a money printer? This is a very good example. And if you want more details about this, by the way, and you want some actual calculators and some numbers that you can use and the easiest intrinsic value calculators available, fundamental analysis, check out my bear market investing course, $99 right now. It teaches you how to identify bear markets, identify the best companies in the world, and then figure out what price you should be paying for them so that you can actually wait for them to hit that price so that you know that you're buying these world-class assets at the best deal. But you have to answer the question of how much are these companies actually worth, which you do by answering the question, how much do you pay for a money printer? Let's say you have a magic printer that prints out $100 a year. How much would you pay for that printer? Would you pay $10 for that printer? Absolutely. Everybody would pay $10 for a magic printer that prints out $100 per year. You'd probably try and buy as many of those printers as you can. It's a no-brainer because after 1 year, you've 10x'd your money. Now, how much would you pay $1,000 for that printer? Well, most people probably wouldn't because you'd have to wait 10 years for that printer to print out the money that you spent on it. So then you have to wonder, okay, well, what's the risk the printer breaks? What's the risk it runs out of ink and I have to spend more money on ink to be able to continue to print more money? So maybe that $100 a year that it prints out, maybe it's only worth $80 to me because it cost me $20 for paper and ink every year. So you have to ask these questions. What are the chances that something might happen to increase the amount of cash that it's printing out every year? Has the amount that it's printing been exactly the same every year? Is it a brand new printer or is there an old track record I can look back at and see how many dollars it has printed out in the past? So you have to answer all these questions and then determine for you how much that $100 a year is worth. And that's where things get subjective. So you have to look at a company and you have to look at its prospects of growth in the future, look at how much money it's making, how much money it's losing, what is it losing that money on? Is it spending that money on things that it has to spend? And if it doesn't, it's bankrupt? Does it spend that money on things that it just wants to spend that money on for potential and proven growth? So what is it spending the money on? Where are those profits coming from? How resilient is it? How much of a track record does it have? And when you weigh all those factors together, then you come up with your subjective valuation and opinion on how much you think that company is worth, how much you should be paying for that company. And only then can you know whether Square, whether Block is on sale right now at $59. It makes no difference that it was at $275 a year ago. And only then can you know the answer to whether Apple is worth $130 per share. It makes no difference that it used to be trading at $150 per share, that it used to be trading at $80 per share. You have to figure out for yourself what that future cash flow, that future potential value is worth to you right now in the present. So don't pay attention just to stock prices, just to market caps, just to past prices. You have to do the work yourself to know whether something is on sale or not. And as one final kicker here, I believe that within the next 6 months, we're getting very close to some sort of a cataclysmic financial event that will prompt a pivot, and that prices very soon here will be at a point where they will not be as low for potentially decades. Because once the money printer turns back on, prices go through the roof. We risk a crack-up boom. We risk hyperinflation, where the value of something being determined against the value of the dollar that is losing value extremely quickly means that that thing is worth more than those dollars at pretty much any price, which means the price can go to infinity. As always, I really appreciate you guys. Thank you so much for watching. Have a great day.